Hey guys, welcome to my channel. Today's video is going to be about 3 stocks to buy and to possibly add to your watch list for the month of July. The first 2 stocks I'm going over I currently have a position in, and the last stock I do not have a position in as of yet. So the first stock to buy for the month of July is AbbVie. AbbVie is a biopharmaceutical drug company with a current share price of $73 and a dividend yield of 5.56%, which comes out to be $4.28. So the big news with AbbVie right now is their Allegrin deal. AbbVie announced its plans to buy Allegrin, the company behind Botox, by early 2020. This deal is composed of a cash and stock exchange that is valued at $63 billion. Each share of Allegrin will be exchanged for $120.30 in cash and 0.866 shares of AbbVie, adding up to an additional 283.9 million, bringing the total outstanding shares to 1.746 billion with an annual payout of 7.7 billion. The main upside from this merger is to reduce AbbVie's exposure to Humira, losing its patent protection in the US by 2023, which is its biggest market. With Humira making a majority of close to 60% of AbbVie's revenues, this will bring in the number to around 40% once the deal closes. By the time their patent runs out, Humira is expected to bring in no more than 25% of AbbVie's revenues. With AbbVie taking steps to securing its long-term success of the company by acquiring Allegrin, which should result in $15.7 billion of growth area sales, which brings tremendous value to the deal, with a majority of growth coming from cosmetic appearances at $4.3 billion and Botox Therapeutics at $2 billion. But when a company acquires another company, the issue that arises is debt. As you can see on the chart, a majority of the combined company's debt maturities are highest from 2020 to 2025. This is without adding any new debts that will be added, which can hinder the company's financial capabilities. On the bright side, management has promised to reduce debt by 15 to 18 billion by 2021, along with issuing a statement about their dividends, saying, assuring that we can continue to drive a strong and growing dividend. We are absolutely committed to a growing dividend and nothing has changed. With such a positive statement, it seems that the company's dividend will continue to see strong dividend growth, but being realistic, when a company has higher leverage, in this case $30 billion to help finance the new deal, always casts a little uncertainty to a dividend. I expect the dividend to grow at a low single-digit rate until the company improves its balance sheet, which will probably happen sometime after 2025. Not only is AbbVie on my watch list, but it is a stock that I plan to add more of my position to. Full disclosure, I am long AbbVie. Now, moving on to the next stock for the month of July is Lockheed Martin. Lockheed Martin closed the most recent trading session near 52-week highs at $369.92, with a dividend yield of 2.37%, which comes out to be $8.80. As you can see, Lockheed Martin is up almost 24% for the year and 14% higher than iShares Dow Jones US Aerospace and Defense, which is an ETF that tracks the aerospace and defense sector with companies like Boeing, United Technologies, and Lockheed Martin. Now with their outlook, 80% of Lockheed Martin's revenue does come from the government, while the rest of the 20% comes from international sales. Lockheed Martin reported a $5.99 EPS, which beat estimates by $1.65, which is a 39.6% increase. Revenues did also grow 23.2% to $14.3 billion, which beat analysis estimates of $12.6 billion. Lockheed Martin continued to raise its guidance for the remainder of the year with an EPS forecast of $20.05 to $20.45 from its previous EPS target of $19.15 to $19.45, which is almost a 5% increase in forecasts. Not only is Lockheed Martin poised to have a good year, they are also a dividend achiever, which is when a company has at least 10 years of dividend growth. Lockheed Martin has 17 years of increasing their dividends. With a strong free cash flow, EPS, and a low payout ratio, I think their dividend is relatively safe and can continue to grow. With Lockheed Martin showing growth in all of its divisions while lowering operating costs should be the reason why Lockheed Martin is a stock to keep an eye on. My current position in Lockheed Martin is just shy of $300, and I think it is slightly overvalued at this time, but if they continue to beat on both top and bottom lines, I think that would be an indicator to justify its higher price point. Full disclosure, I am long Lockheed Martin. The next stock to buy for July is Carnival Cruise. Now, Carnival Cruise is the largest global cruise company with more than 100 ships currently operating, and my last stock for the month of July. At a current share price of $45.52 and a dividend yield of 5.39%, which comes out to be $2. Carnival has been hit hard this year by lower guidance for the second straight quarter, from 12% guidance in 2018 to 5% for 2019. Carnival is down 20.35% for the year, which comes out to be about $11.38, and is trading at their 52-week low of $44.88. The main reason for this headwind is the political uncertainty in Europe, regulatory U.S. policies against Cuba, and cancellations of 3 sailings of the Carnival Vista due to technical issues with their ship's cruising speed. The majority of their anguish are short-term problems, which are being offset by Carnival investing on larger and more efficient ships and their ability to penetrate a domestic market where 1 in 25 people have been on a cruise ship, leaving significant potential. With a current dividend yield of 4.42%, which comes out to be $2, and a payout ratio of less than 50%, leaves its dividend relatively safe. As you can see, they have been paying out a dividend since 2003. Though it has fluctuated, they have been able to pay out a dividend. To add a cherry on top of the sundae, Carnival's president and CEO Arnold Donald recently bought 22,050 shares at a price of $45.23, coming out to be just shy of $1 million, which shows that management, or at least Carnival's CEO, is confident in the company's future. Full disclosure, I do not have a position in Carnival as of yet, but I do plan on adding a small position in the coming days. And that is a list of the 3 stocks that I plan to buy for the month of July. If you liked the video, make sure to leave a thumbs up and subscribe. I'll see you next time.